Hey guys, it's me, Chris, and I'm from the Those Space podcast. So, before we actually start, I just wanted to tell you how I got my money briefly. I actually own a channel on YouTube that has about 140,000 subscribers, and then I kind of progressively reinvested the money, and it all happened throughout this year, mostly 2024. That's where I actually started to pull in kind of bigger numbers, and I just wanted to let you know that my net worth is built all by myself, and then managing my parents' net worth is something completely different. I don't make money from that actually. I'm actually contacting more people to hop on the podcast, maybe some people with different stories, different places of origin, different financial situations, mindsets, and different variables, so that you can get a clear perspective and actually get an objective picture of what it is like to make money as a teenager or adult in 2024 without actually making you pay for a course or exploiting you guys, your time, your money to make money for myself like most of the bigger influencers do. I hope you guys enjoy it and see you next time.
There we go. Okay, so we are now live. So this is the first episode of my podcast, and we have a guest here. Ondrej, you can introduce yourself briefly and talk about why you're here, why I invited you.
Yeah, definitely. And thanks for inviting me and, giving me the privilege to be the first guest. So glad to talk with you again. And yeah, of course, we are here, of course, to talk about, stock market, investments, right? How to become better as a person, how to grow our wealth, how to, become more competent as well, right? So, we've obviously met in the past through investing, but you can tell more about, some of these details if you want. But hey, it's mainly your show, so back to you.
Okay, well, so since this is my first episode, I'm just gonna say that we are here, as you said, to talk about investing, the stock market, but also because I believe that the stock market is, a really powerful tool that can be used, and you're an example of it. I mean, at your age, having $1 million portfolio, seven figures, that's a huge accomplishment, and I'd like to congratulate for that. When I first met you, it was at like five, maybe 600,000. So you've essentially doubled it in like the last, what, 8 months.
Yeah,
So right, yeah, and you're a person that has introduced me kind of to the kind of more serious investing by actually inviting me to the Financial Fortress, right? You're the managing director, I suppose.
yeah, that's correct, right?
Okay.
So of course, we know each other through Jeremy and his private group, because and we both are outside the US, right? So of course, we are both from like the Central Europe, so it's probably even a little bit trickier for us to sometimes connect with other people who like to invest, because here in Europe it's not that common for people to invest in stocks, right? Whereas we both experience that US is of course that wealth creation machine. Lots of those great big companies that we know are located in the US, and that also means that they almost like absorb all of the wealth from the whole world, right? Because when someone let's say I have my iPhone here, right? Well, when I bought the iPhone, that means that there is a certain percentage of money that goes all the way to the US to Apple, right? And Apple shareholders are benefiting from people all around the world purchasing iPhones, for example. And same works for many other companies like this.
Yeah, exactly. So you've actually mentioned that we're both from the Central Europe, and well, I'm Polish. You're originally from the Czech Republic, and now you've moved to Denmark. I
Yeah,
mean, it's been quite some time, but you've moved to study, right?
yeah, that's correct, right? So, back in the when I was, I think, 18, yeah, basically just as I turned 18, I moved to Denmark to study original architecture. But of course, as I was student in the foreign country, I had to take care of myself, simple enough, right? And I mean, whenever you're a student, it's kind of definitely a tough period in life, right? Because as a student, you have to figure it out both in terms of the studies, but also take care of yourself. Whether maybe sometimes parents have to support their children, or we have to figure it out, do some part-time jobs and manage that somewhat tough workload, both studying, maybe some part-time job, right, to figure it out. And in ideal scenario, if we have some money to invest as well, right, so we can really enjoy that compounding from as early as possible. Because I mean, of course, whenever we start, hey, that's great, right? And you can build a great wealth over as long as we put some time and effort into it. But generally speaking, the sooner the better, right? Many times, I mean, anytime people just say, oh, I wish I would have started investing much earlier, right? You never hear a person the other way around, oh, I wish I would have started later. No, right? The sooner the better. And it applies for almost anything in life, right? The sooner we are serious, the sooner we see the results.
Yep, exactly. I fully agree with that. And I believe that, the stock market is also, for people like me, as the podcast is meant for, young adults or even teenagers. I feel
Mm.
like, as you've said before, the stock market, especially in the US, with all the culture and
Mm.
the stock market is uh, mostly something that people or newbies connotate with the US, right? Wall Street. And as you said before, people start investing, but compounding is one of the most powerful things that it could investing can kind of give to a certain investor or a shareholder. So you started investing in 2017, right?
Yeah, that's correct. Basically, as I moved to Denmark, I had to figure it out, to take care of myself and hopefully a little bit protect my. So it was in a sense necessity, right? As I did not have any support from around. I mean, I could have if I probably asked my parents things like that, but I wanted to figure it out as much as possible on my own, right? Take care of myself and prove that I can make it happen, right? Also make my family proud, make my father proud in a sense, and make myself proud in the end, right? Which of course, again, definitely wasn't easy, but it's definitely possible, right? As long as we take it seriously, because as you just mentioned, investing, it does not necessarily need to be something super complex, at least initially, right? It could be gradual process, right? Doesn't mean that we need to have everything figured out from the get-go. But as long as we slowly progress, or even some people, and I've actually all the way back when I started investing in 2017, I was just partly buying some index funds, S&P 500, because back then I didn't know almost anything about the market, right? So I just went kind of like that safe route, S&P 500 partly, and partly some of the bigger safer companies, right? So once again, basically the first individual stock I bought was Apple, because that was this big company, everyone could easily understand it, right? Back then it was also quite undervalued on like the price to earnings basis. And I kind of started to understand these small nuances about the market valuations, but just slowly, of course, right? So it took me also at least a couple of years to get more confident, get more comfortable. So then basically during my second year of investing, I slowly sold out of the index and moved fully into individual companies, and kind of gradually ramped out a little bit of the difficulty in a sense, right? And become more deliberate investor, making calculated moves. But it was gradual process, right? And I'm still learning, right? That's the and the market always kind of throws some kind of a curveball at you, right? It's the moment we think we have it figured out, the market will school us. So we have to be always keep learning and see what's happening in the world.
Right. Yeah. So you said that you started kind of rotating out of the S&P into individual stocks in your second year. So I will.
I can hear you now. Yeah.
Okay. I'm sorry. It's just there's something with my mic. Anyway, um, you said that taking the easiest route. I mean, investing into the S&P is really popular.
Mm.
Almost every citizen of the US in the middle class has a Roth IRA. People basically depend on the stock market as well as, different funds, whether it is some retirement funds or different sorts of banks, wherever. And I want to touch upon your kind of most successful investments and how you kind of, get a gauge of how a company will perform at quite a basic level, right? Because let's be real, it's not an easy path, like to
Mm.
actually go from understanding the S&P only to knowing how to value companies, especially in like the first year or two is quite a
Mhm.
complicated and maybe risky topic for many people, as nowadays it's really easy to get misinformed or just ride the hype train
Mhm.
and then get destroyed really easily. Okay.
Yeah, and I would basically, a little bit continue on what I've just mentioned, right? That for most people, the most optimal ways usually make it somewhat gradual process, right? So of course, if we are, let's say, on that one hand, we have like that super safe thing, just investing in an index fund, don't care. Then we can slowly move into individual companies and maybe start with some of the bigger proven names, right? Of course, you have your Apple, you might have, let's say, Microsoft, Amazon, right? Some of the companies that, like everyone knows, right? And in a sense, you quote unquote can go wrong. Of course, depends on the valuation and then some of the nuances. But over the long term, we will probably do fine if we choose some of those bigger companies, right? So that's almost like that, first stepping stone, right? Getting more comfortable with some of those bigger names that are somewhat simple investment, but at the same time, you cannot expect some insane results. And slowly move into, let's say, more complex parts of investing, where let's say, as the next step, we would have maybe some lesser known companies, right? Where I don't know, for example, AMD comes to mind, or maybe PayPal, right? Kind of like that, second group of companies, which are still, big, proven, profitable companies, but maybe come with, certain more nuance. And then we also have to start to educate ourselves a little bit more in depth about the valuations, how the market perceives the companies based on those different metrics, right? So if we are moving past that point, not investing just in the big names, Apple, Microsoft, and so on, then we have to also basically make sure that our knowledge is on par with what we are getting into, right? So
Right.
starts to educate ourselves of some of the financial metrics, start to understand accounting, that's basically like a language of business, to understand, hey, when we look at that balance sheet, when we look at that income statement, that we have a somewhat good understanding how the company operates, if it's a company in a healthy position, if it's something worth investing, or maybe something, hey, there are maybe some red flags, right, that make it, maybe a little bit trickier investment, right, or maybe even not investable. And then kind of moving through that point into some maybe, even more riskier companies, maybe some of the high growth companies, where once again we can go, further and further into that riskier category, as long as we put enough time and effort into it, right? So then when we are maybe investing in some smaller companies, some small caps, could be very much viable, right? But we have to put even more time and effort, right? So it's almost like, hey, you can definitely get better results if you're investing in this kind of companies, but it requires more involvement from us and more deliberate approach.
Yeah, exactly. And you have to be much more patient with, especially with the lesser known companies, as you know, for example, I started investing in this year in March, and that's when I actually put my money into a brokerage, and I started making money off of YouTube, and before I did some digital marketing. And I thought that since I'm 16 and I have a roof over my head, I'm also in a good school, I get good grades. So if I can actually, leverage my situation and my position, the safety that I am in,
Mhm.
and just go all in, because I was interested in the stock market itself, in economics, and it's a pleasure for me to actually learn about all of that stuff.
Mhm.
It's very interesting, but I kind of threw myself into the deeper waters, because I thought, like, hey, I'm just gonna spend 2 or 3 hours every day just going through the group
Mhm.
chat, asking people, reading stuff, watching CNBC, and I started off. I've never actually put my money into an index fund or an ETF,
Mhm.
and I started scaling my YouTube channel, and with that my kind of knowledge grew bigger, more kind of
Mhm.
I was actually making more educated kind of decisions. And I actually started with some small cap companies. I mean, it's not a small cap, but so far, for example, especially
Mhm.
in Eastern Europe, nobody, or in Europe, nobody knows what SoFi is, because it's a company that kind of operates, at least among the consumers, in the
Mhm.
US. And especially in the early days, like March to July, it was tough with SoFi. And I had my parents' money under management as well. At first those were much smaller amounts, but I'm fortunate enough to have my dad being an engineer, and he's
Mhm.
actually an educated businessman, so he kind of, you know it wasn't like oh, a risky bet, but he kind of saw that what I'm doing and what I'm researching might be risky, but for me as his child, it would be also a lot of education, a lot of experience that not many people are actually fortunate to experience at such a young age, before even graduating high school. And that's how I got to your group.
Mhm.
Then I built in the local currency, Polish zlotys. It's the dollar times divided by times four. I'm sorry. I've managed to build a 200,000 zloty portfolio, which is way above the
Mhm.
It's like twice the national average salary of a corporate worker.
Mhm.
Which at 16, going full time to high school, the IB system, I believe, is quite impressive. But I'd also like to get your perspective, like how did you get inspired to actually start investing, and how did you start?
Yeah, definitely. And maybe before I even jump into that, exactly right, because you mentioned how you started from an early age, and it's great that you also have support of your father, right? That really allowed you to be serious about this from such a young age. Because now you have this, now you are building this skill of investing that you will benefit from for those next 5, 10, 15, 20, 25 years, right? So really, the sooner the better, because of course that just gives you such a huge head start in life. So definitely great to hear your progress, also taking putting everything together also with some of those side projects, right, where that allows you to also invest quite a reasonable amount into your portfolio. So that's amazing, because it sounds like for you it's kind of more like you have that support of your family from very young age, whereas for me it was almost like I kind of wanted to prove that I can do it, or I needed to prove to myself that I can do it on my own when I actually move out. Even though if I would have asked, I'm sure my father would support me as well. But I kind of wanted to figure it out on my own, and also basically me being in a new country, wanted to prove to myself that I can take care of myself and everything. So that was kind of that, almost like a necessity for me to learn about investing.
Right. Yeah, actually, it may seem like, my parents fully support me, but I just wanted to say that it wasn't always kind of, they weren't, I mean, they always knew that I was planning to do something,
Mm,
but I started my first legitimate business in the first grade of high school. I
mm,
started reselling perfumes. and then I was actually doing it all while learning advertising and doing Google
Mm,
Ads, because I had an ambition. I still have the ambition to, be financially free by 21,
mm,
with, my own money only. I mean, I am fortunate enough to have spare capital of my parents and have a roof over my head, but I also want to move
mm,
out when I finish high school. And, if I have the opportunity to just help my parents and, actually help retire them, because,
mm,
uh, give give or take, like, if you have the opportunity to, retire your parents by leveraging their finances, it's also a great feeling. And doing it all while, they work a lot, because, they're quite high in some companies. It's a really good feeling, but I also just want to move out and just do it on my own, because,
mm.
I also have this feeling of a kind of, it's, I can't explain it, but, I resonate with your story so much. I mean, with what you did, it's actually incredible.
Yeah, definitely. And then maybe, to almost kind of redirect the discussion back into, a little bit like investing and some of the practicalities. So maybe what I'm curious about is, especially given that you're, still somewhat newer to investing, what do you maybe find most challenging at this point, right? When even, you went fully into individual companies basically from the start. So what was like that initial year, let's say, for you?
Well, so it's actually, when I tell my friends how I started off, they kind of think that it was a weird approach, but I actually think it was really effective, because what I did was just I started watching CNBC every day, and at the
Hmm.
beginning, I didn't understand a single thing. I kind of took an approach of how people, how little kids move out into a foreign country, and they go to a foreign school, and they don't understand a
Mm,
single a word. But then after some time, when they kind of do some research or ask people what single words mean, they kind of start to
mm,
compose sentences, and it starts compounding. uh, and what I did was just googling every definition of a word I didn't know. I started, watching things like what is a balance sheet, what is a financial statement, and
mm,
then I started transitioning to, kind of, depending on what company I was actually researching, I made sure, to not gamble, basically, because many
mm,
people fall into the trap where they, watch a single or two YouTube videos about a company, and they think that's enough, especially with,
mm,
the ease of buying stocks nowadays. It's literally a single click, and it takes maybe 10 minutes to set up a brokerage.
mm,
And so I just took some specific companies with the help of the group, actually. I mean, I went to the group and started kind of searching through the businesses. I mean, what the companies did,
mm,
and, took the basic approach of listening to the conference call, reading the 10K, and then I'd either ask questions, read analyst reports, or use a lot
mhm,
of seeking alpha. And then, the knowledge would start building up. At first the sums weren't anything big, but, as I gained more and more confidence, I still knew, and I still am aware that, I'm not experienced, and that's the major kind of issue. I've been in the market for 8 months, and the 8 months have been great, and it's really easy to get complacent with the results
mm,
that I've achieved, because 100% makes it seem like, you know it's nothing special. But 100%, Palantir, for example, I know that you have a huge return on it, but even I bought it in early March, and
mm,
I, at one point, I had almost 400%, which, especially with Palantir, it's a really hard business model to understand, and that's where different books and analyst calls come in,
Mm,
or different reports. And I kind of took the approach of taking things piece by piece and then just digging into it and then moving on. Like, um, to be fair, I'm not an expert in any of the fields that I invest. I mean, well, it sounds bad, but I'm not an expert, but I am really confident in the
mm,
companies I invest in, and I'm sure that they will be able to perform with what they
mm.
are putting up.
Yeah. And to build on what you just mentioned, it's also we don't necessarily need to become a expert in the field, right? But we have to make sure that we are kind of moving towards that ideal, because also investing, it's in a sense making a judgment on companies, right, with somewhat incomplete information, right? We can never know everything, not about the company, not about the market. So it's also about knowing enough to be able to make the decision, right? Because I mean, in the end, it's always quote unquote just an educated guess. But the more educated it is, the bigger the probability that we are successful, right? So also when, let's say, even a competent investor, let's say if we have portfolio of 10 companies, well, there are probably going to be maybe one or two companies that will kind of disappoint us, right? Suboptimal returns, maybe we lose money on them. Maybe then there will be, one or two companies like Palantir that will surprise us many times over on the upside, and then this middle ground of companies that will do reasonably well, right? And in the end, we of course wait a little bit of some of those losers, hopefully more of those winners, and we should aim to, of course, outperform the market, ideally with a significant margin, especially when we are, you know, spending the time and effort into it, right? So then also, of course, a competent individual investor should aim to somewhere those 15, 20, 25% compounded annualized on a long-term basis, right, to almost like be compensated for the time and effort that we are putting into it, which of course on a decade, that makes a huge difference if we are getting results just in line with the market or just a couple percentage points extra, right, as the compounding takes place. That becomes a difference if we are growing our portfolio to six figures or seven figures, or eventually even further, right, if we just expand the time horizon.
Right. Right. Yeah, definitely. And could you also say how what resources you used as, a student of architecture, and you've worked a lot of side hustles as well, and you must have had some spare time, and could you just briefly say how you used it and what you kind of, you know, did or read?
Yeah, and thanks for asking that, because yeah, exactly right. We have to, regardless of what we are doing in our life, we just have to make time for what our priorities are. So sometimes people are saying like, "Oh, I don't have the time. I have a family and I have work and everything." But as long as investing is important for us, we have to find at least some time, those couple hours every week. Because for example, what I did on a practical basis back in the days, back in 2017, 18, 19, let's say, is I was of course going to the university for architecture, and I was basically traveling every day, like 45 minutes one way, 45 minutes back. And during the time I was mostly either reading some of the books of the investing legends from the past. I was watching some YouTube videos, listening to podcasts on investing, right? Also of course in the group, discussing with other people, some more experienced investor, right? Because back then I was just the new guy, right? In 2017, 18, 19, I was just the new guy with the first 10, 20, 30,000 in the market, trying to figure it out. But I had access to those people who already had multi six figures, seven figures, and I was observing, okay, how are those guys doing it? What are they saying about the market that we are having now, right? And kind of try to see, and not just listen to someone like, and of course both reading some of the investing legends, Warren Buffett, Peter Lynch, that's one thing, right? But then also seeing how maybe those people who are just a couple steps in front of you, right? Because of course then it's sometimes almost like a little bit too big of a gap if I'm trying to see what Warren Buffett is doing now. he's playing a completely different game now, right? I'm not playing his multi-billion Berkshire Hathaway game.
Yes.
I'm playing my little league here, right? Still, so I have to learn from someone who's maybe having just those 6 figures, 7 figures, because that's somewhat close, and I can see that, hey, if this guy is doing this, well, I can basically get where he is in maybe 3 years, 5 years. Let's see, right? But it's somewhat attainable, right? You can actually easily see how it can be achieved even for us, right? I mean, if you would have asked me 7 years ago, I would have never imagined that I would have 7 figure portfolio, now at my age. But I knew that it's possible. And okay, maybe I wouldn't guess the 7 figures, but I would say, hey, well, if I invest in this and this, maybe I can have at least 300,000 by this point. And of course, then it's maybe, of course, a little bit of, hey, sometimes we maybe catch some of the wave, right? Or we get also, quote unquote, a little bit lucky. That could be also a part of it, right? But I at least knew that, hey, if I stay on this trajectory, I will end up somewhere here or here, right? So it's never like a binary outcome, but you know that, hey, if you're making all of the right moves, then you are also moving in the right direction. And then it's, of course, the question if you end up a little bit higher, a little bit lower, but it's still better than you're doing the year before. At least that's what my father's always saying. When I tend to, of course, as everyone tend to complain from time to time, and my father is always like, okay, but are you better off than you were the last year? You are, right? So stop complaining, right? You're doing well. So that's kind of probably that proximity to having other people around. That's one of the key points.
Yeah, and I believe that.
What you just said is also a kind of good analogy for valuing stocks as a beginner. Kind of just getting an estimate of the range that you can get because you're not always going to be certain, and especially with the knowledge that you have, like this Christmas break, for example, I'm trying to actually really understand the DCF model, the discounted cash flow and the weighted average cost of capital model, to just kind of deepen my knowledge of both investing and business. But what you just said, the most important thing is to just see whether you're better off than you were before. And then the question is whether you're gonna significantly kind of outperform your expectations, or you're just gonna kind of match them, or maybe be a bit below them. But you kind of should have a threshold that's the bare minimum, but never the maximum. It's it's a approach that you kind of you don't need to be an expert in both the companies and the evaluations, but then you'll have to do enough due diligence to the point where you're kind of you have a price range or price target, especially in long-term investing, because you're never sure, especially like with Palantir, for example, what's happening right now. Like, even I thought that the company would start to sell off maybe above 60, but on Friday it had an 8% move upwards. It's crazy.
Yeah. And I'm glad that you connected the same principle to investing, right? We can never be absolutely correct when we are doing some of our valuations, projections, but we should roughly understand what's the range of the possible outcomes, right? Hey, if the company does exceptionally well, it might end up somewhere here. If maybe the management is expects a little too much and it's not going to pan out well, it might still end up here. Is that still better compared to where we are? Because now as you try to tie it to Palantir, right? Now in the 60s, 17, 80s, well, that's now we are definitely pricing so much, from the future that this is a little bit uncharted territory, right? But what was, for example, that important point for me when I was investing in Palantir, 2 years ago, was that, hey, when Palantir was at those 8, 10, 12, maybe even 15, well, there was still significant upside, right? That I could see it easily go to at least 30. And of course, anything above that, okay, now we are in that little bit uncharted territory, right? but it was good enough for me to invest because I know that like, hey, this company should deserve at least $30 per share within some reasonable, let's say 3-year horizon. And of course, it exceeded my expectations, many times over. But hey, that's great, right? But the main point is that we had that confidence that it's going to be at least this. If it's going to be more, great. And I think that's also, somewhat conservative way how to do those valuations, right? Imagine a couple different scenarios and 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 have enough judgment to also, you know have a certain, almost like a threshold, right? Don't just buy a company just to buy a company because you hear about it on CNBC or from someone on YouTube, right? Or you might like the product, but let's make sure that the numbers also make sense, right? That we are actually investing in the companies that only have that potential to beat the market with the results that we are expecting.
Exactly. Yeah.
And that's how I also approach the companies that I invested in, especially SoFi was a big one. It's my biggest holding, and it was one of the first companies that I bought. But when I was looking at SoFi and their valuation, of course, before I actually did it, that's where the group comes in. And for example, with SoFi, data-driven investing, not sure if you know this guy. Yeah, he's the SoFi guru on X, and he's helped me understand the company and fintech as a whole, much more deeply. And that was a point where I could see the company in a year or 3 or 5 being much more expensive with all the growth rates and opportunities that they had. And the price target is something that is kind of subjective, and it can always change. But I could easily, I mean, I could see it easily being above 20 in the next 3 years, and look at it now, it's 16.
Yeah, definitely. And you probably remember that I have also somewhat significant position in SoFi myself. So, and exactly, there are some of the great resources like data-driven investing, right? So big shout out to him. And if we search for these resources, right, maybe overlay our own projections, we can also see what's possible with the company. Because if SoFi continues to execute, right, they just recently crossed that 10 million members, right, which it's definitely a significant number. Which it's starting to be somewhere up there with some of the big banks, and if they can continue on this trajectory, I would say it's and actually you can check my post on X. So I have like a $40 price target for SoFi by 2030, right? So still kind of basically like a 5 years out price target. Which I don't think it's unreasonable. I mean, even from here, right? So that's still almost like a little mediocre price target from 16 to 14, 5 years, right? That's almost like just slightly better than the market. Maybe, could be even better. But exactly, we both bought SoFi when it was in that definitely undervalued territory, right? So we are already, both of us are kind of like a double up on SoFi, which also gives us a little bit of that briefing room, right? Hey, we already have those gains. We don't have to push it aggressively. So sometimes it's also about, when we have a really good entry price, that makes it a little bit easier for us, and we don't have to be that, that nuance on maybe any potential exit points, right? So really buying the company at a good price. That's that first, and since it's first, it's almost like that most important key point, right? Of course,
And
let's say
what you just
position could
mentioned,
be different, but
but what you just mentioned, I feel like is really important. The point at which you have the kind of price of your shares, the average price of your shares is low enough to the point where you don't actually have to strategize or stress about the exit. And I also believe that's really important for the long term, because if you're constantly thinking about, exiting the companies, then well, you can trim your gains or sell in order to buy more of a different company if you see a better opportunity. But I believe that the mindset that you just talked about is really important, especially if you think about, holding companies for more than 2 3 years. And as you've said before, you have much more experience, and you've invested into different types of stocks, which I will want to touch upon. But first, I just would like you to talk about one thing. I will present the screen. Give me a second. This.
Yeah, I know what you're pointing at. So, and it was one of that, again, connecting to that mindset, right? When I was, new. So, for anyone who doesn't know, I basically posted like the big Twitter thread on kind of, my journey and some of these things that I've touched upon here also in this discussion. How I basically moved to Denmark, tried to figure out investing, right, working some of the part-time jobs. And basically, there I made little joke / promise that I'm not getting a bet before I reach my first million invested, right? So there in that original thread, I had basically like the picture of my, just a mattress on the floor. But yeah, this is somewhat recent that I finally, reached that first million and got myself a proper bet. Strange experience, to be honest. But hey, here we are, right? We all have to move up, afford ourselves some luxury.
Yeah, but I also
Think that you have one of the I really admire your mindset, but I also think it comes from your hobbies during your childhood. I mean, your youth. You used to fight, right? You did Muay Thai.
Mhm. Yeah, that's correct. Yeah, Muay Thai, boxing. I was even, let's say somewhat, semi-professional junior level. And, regardless, and I can definitely recommend, martial arts or frankly, any other sport for that matter, right? So, especially, when we are young, it instills lots of discipline, makes us more resilient. So, whether it's, martial arts or even, could be some kind of a, collective sports, right? But it's great to work with other people, work with the coach, because I think that's also, in a sense, that upbringing is part of who I am and part of my success, right? That I had a great coach for Thai box, right? Who, made us all in our gym, made us disciplined, made us do all of the exercises, kept us in check, taught us plenty about, of course, the martial arts, because it's also, training for both physical but also, mentally, right? To understand everything that's happening, be really in the moment, be focused. So, we are kind of building ourselves as a, as we go through life, go through these different experiences, whether it's connected, to our, physical health, whether it's, about investing, work, money, relationships, right? We are going through those experiences and we grow, right? So the goal is in the end for us to live interesting life that we enjoy, going through and become someone, better and more competent.
Right. Yeah, I fully agree with that. And I also what kind of got me started into the whole business thing was also signing up to the gym. I mean, I started going to the gym because I got inspired during the kind of 2022. There was a phase where fitness got extremely popular. And then, I started being really consistent with my diet, and I kind of got into powerlifting, just
Mhm.
trying to, lift quite a lot of weight. And I also believe that any kind of sport which requires you to be consistent and kind of to endure the ups and downs, be patient, is
Mhm.
something that will definitely kind of help you with anything in life. Yeah, okay. So, now we can move on to kind of actually different approaches that, you should kind of take when you're investing. And before we do that, I would like to ask about your opinion on the recent rise of the speculatory meme coins. What do you think about those?
Yeah, well, and if we are going all the way into the speculative territory and cryptocurrencies, right? That's almost like the little bit of the current sentiment check of the market, right? Because as you've mentioned initially, you joined market and been participant for roughly the past year, and not just the past year, but basically past 2 years were great in the market, right? Which attracts lots of people, and it starts to be more and more of those people who are looking more for some of the speculation. So of course it's whenever the market starts to be hotter and more exciting, it just brings this you know different group of people who are looking for that short-term excitement, and it basically tilts all the way to speculation. But of course, that being said, if we would go back to 2020, 21, we are still nowhere near of those extreme levels, right? So back in 2020, 2021, there were all of these NFTs and like super speculative things. So I mean, even though the market is at all-time high, is still nowhere near where it was back in 2021. I mean, that was completely different.
You know what? My actually my first investment was crypto in 2021, and I had to also I was trying to convince my dad to let me put 100 bucks into Coinbase, but it
Hmm.
was September, and I remember this coin that got really popular back then, Shiba Inu,
Hmm.
was at 0. Whatever, however many zeros you want to put in, but it's kind of ended with a 2, right?
Hmm.
And it was September, and before I actually got my dad to set up a Coinbase account for me, it was early November, and that was the absolute peak of the bull market
Hmm.
in both crypto and stocks. And I bought Shiba at zero point 0.8, and then it
Hmm.
fell completely. So I also believe that with the rise of social media and the whole kind of trading mindset of people, and people
Hmm.
thinking that the stock market can get you rich quickly, is also something that we should just touch upon, because at the end of the day it's something risky, and
Hmm.
with the access to options or day trading
Hmm.
margin, it's something that people should watch out for, and definitely be educated about when starting off their investment journey, because it may seem kind of slow and monotonous compared to all the people you
Hmm.
see on social media, half of who are probably kind of faking it in
Hmm.
reality.
Hmm.
But it's really important to kind of know what you're getting into, especially in this kind of speculatory exchange markets of any sorts. So I wanted to kind of touch upon the three kind of most popular approaches you can take in investing, and that's
Hmm.
growth, and actually those are two: growth and dividend slash value plays.
Hmm.
And as you've said before, could you tell what you treated Apple as? Did you treat it as more of a value or something kind of growth oriented when investing into it?
Yeah, I see what you mean, right? And it's almost, it's never like a binary, is it this or is it that? It could be a little bit of both. It's it's always a spectrum, right? Kind of like the investing, moving to speculation, or value, moving into the growth. And in the end, whether you kind of try to categorize, growth, value, or dividend, it's a little bit arbitrary, right? Because I mean, in the end, what matters is if we can get more from that investment that we put in. So it's almost like, to be a little philosophical here, I don't necessarily like that distinction that much, right? Because it makes it a little too simplistic, right? Because I mean, every investing is in a sense, value investing, right? That you kind of try to get, more value in the future. That being said, because usually when people ask that question, it's always like a little bit more, okay, some of the growth names are a little bit more aggressive, almost could be a little bit more speculative, unless we know what we are doing, right? So it's almost also a little bit like distinction. Hey, some of those quote unquote value plays are usually some of those more safer companies where we can expect reasonable returns, and they are also a little bit easier to understand, easier to value, right? Because let's say if company is growing, let's say high single digit or low double digits, when you kind of try to figure out what's going to happen with the company in the future, well, if it's going to grow, let's say 8%, 10%, 12%, it's this range, right? But if we are talking about some of the high growth company, well, it might grow 15%, 20%, or 25%. That's much, wider range. And that makes it a little bit trickier to, of course, value and establish what's most likely to happen, right? So, and that's also this distinction between value names and growth names. What are we getting into? And understand that, hey, if I'm buying this company, am I buying something that's relatively safe with reasonable results, or am I buying something that's maybe multi-x opportunity, but it has some key risk that needs to be accounted for, right?
Mhm.
Yeah, definitely. Uh, what you just said, I also think that you cannot really look at companies as in, bringing you growth only, because I kind of took an approach relating to what we said before, as you're searching for something that has multiple growth levers that you can pull, but also something that at its core has has its value, has something that cannot be replicated, and that's where the classic theme of the moat comes in. And I believe that different companies have well, it all depends on what you're kind of entering, whether you're kind of going into the consumer discretionary or tech.
Mm,
It all kind of revolves around a certain value proposition that would
mm,
allow the firm to kind of uh be more distinct than others, right?
mhm.
Y-
And
yeah,
that's also why
okay.
I
Hmm.
kind of believe that people should rather, invest in like some reasonable number of companies, but understand them well, instead of, sometimes what I see people that they might invest into, 20, 30, 40, 50 companies, right? And it's a little bit like, spray and pray. They have some companies, some of them are doing well, some of them not so much. Maybe, some of those companies will have solid results, some of them not so much, right? And you're almost creating your own index in the end, right? If you have 40 companies, well, then your results are basically drifting back towards that average, right? So,
Hmm.
for most of the people, it's usually reasonable to have somewhere between like 7 to maybe 15 companies. That's kind of like the reasonable range, at least for, kind of like the average investor in those 6, maybe even into 7 figures, because that's also something that we can reasonably, keep in our head, or maybe keep some folder with the research. But we don't have, of course, most of the people, hearing this investing, we have limited time, right? We have our work, we have family, we have hobbies, so we don't have, time to spend like the full, 40, 50 hours a week doing a research to actually understand, 40, 50 companies.
Right. Yeah. That.
That's something really important, and I think that it's kind of what's beautiful about investing is that it kind of reflects life. I mean, if you want to kind of uh, get deeper into certain topics, and as we've talked before, being an expert in something, you're going to be much better off kind of chasing 7 to, I don't know, 10, or maybe less in real life, but it all revolves around the endeavors that you kind of want to really immerse in. And as you've said before, getting 50 companies in one portfolio
Mm.
is both mitigating the risk, but also limiting growth, because you're not kind of using your full potential, and your
Mm.
due diligence is not spread into kind of the deeper areas where you can actually kind of get the alpha, and that's where you kind of have the biggest edge in. It's where is the companies that have something which is not really seen by the general market. For example, I don't know, Palantir. It's the truth is that, as you've said before, you could easily predict 2 years ago that their fair price was over 30 in a certain amount of
Mhm.
time. But that's where other investors or institutions just don't seem to accept it. Oh, 1 second. My cat's my cat's screaming. Okay, I'm back. So yeah, that's where we should also touch upon the group, the private group. I think that it's really important because I you're kind of my mentor, I guess, partially because I follow you, people like Jeremy or
Mhm.
Bayray on Twitter really closely, and it's where behind your back you have the Financial Fortress logo. Actually, yep, I have the card right here,
Exactly. Yeah.
and I feel like getting a mentor is also very important because
Mm.
uh, especially in environments where you can be connected
Mm.
with people who cover different companies. You're really deep in Palantir, but people like Jeremy, for example, he knows a lot about the consumer discretionary stocks.
Mhm.
Then there's people who are kind of more specialized in banking because they actually work in banks, and that's where the network effect is kind of really important.
Mhm.
But I guess you could kind of touch upon how it is to actually kind of be behind the stage, behind the curtains of such a group. What it is like to kind of be the person organizing it.
Yeah, definitely. And thank you for asking, right? Because that's, we've been right, or the private group existed all the way back since 2017, right? Where Jeremy originally established it to almost like collect the people who are serious about the market, who want to learn, who want to develop, to facilitate this network effect that you've mentioned. And I first joined as a member, all the way back in 2018 when I was still new, and eventually started to help Jeremy, talk with the new members, facilitate some of the discussions, research that we are doing. And it's in a sense, I think there is a lot of power in the communities, right? Having access to other people who are serious. Because of course, on the internet there are so many people with so many different opinions, random people, bots, things like that. So it's always nice to have like this, almost like a filtered research, let's say, right? Or be around people who are also serious, right? That who as I initially mentioned, right? Because what helped me initially was that there were some of those people who are just a couple of steps ahead, and I could somewhat relate to them and understand that, hey, if I make all of the right moves like this guy is doing, I can very soon be where that guy is, right? And that's where I'm aiming towards, right? So then we are all doing that research, helping each other, as you mentioned, experts in different industries, from software development and logistics and restaurants, right? Exchange informations, feedback, give each other feedback, share opinions, and also go simply deeper, right? Because there is also, certain level of depth that people can get from, YouTube, or even here when we are having this discussion, right? We are still kind of, going over the surface. But if we actually go deep into the research, what different financial metrics mean, accounting, well, then we have to uncover those layers of learning, right? And both educate ourselves and, hopefully through that community make it simple, a little bit easier, right, for each of us. So it's same as having that professional team, right? As back in the days, I had my gym when I was training Muay Thai, and I knew I had these other people that I can spar with, get better. Well, same here. It's just the intellectual gym, right?
Right, yeah, definitely. um that's kind of which I wanted to relate to. I mean, the thing is that as you said before, there are many people who are experts in different fields, and the exchange of information actually is, I think, one of the most valuable things that you can get, especially in stocks, because you actually have to get a variety of opinions. As you said before, there is no such thing as a black or white in the stock market or in general in life. There is always a spectrum, and there are people who are bullish, but some prefer to hold or simply do not enter different stocks because of different viewpoints or preferences. And I guess that's what kind of sparks the debates and then makes people get a much more objective picture rather than being biased, because that's kind of one of the main issues, especially in things that, as we've said before, we're never gonna be able to grasp the whole thing. But
Mm.
when we kind of combine all the resources, it's much more reasonable to make the educated guess, actually.
Mm. Yeah. And seek some of those professionals in other discipline, because I think that was, for example, instrumental with Palantir, right, to get some experience from people who either work in the software development, or we had some people who even worked in the military and basically have like a first-hand experience with something like Palantir, who could basically vouch for that product side. Hey, Palantir, it's a great company, the product is amazing, they are doing something completely different. And then, well, someone like me might look from that financial perspective, right? So I might verify the financial side, someone else might basically vouch for more like the product side, and we get both of those perspectives.
Right. Yeah, definitely.
And could you kind of mention how you combined your degree in architecture with kind of investing? Like how did you use it? I mean, because I've actually seen your post on Twitter that you've said that 2 degrees are not necessary. And what's your kind of stance or on education and formal education?
Yeah, and there's definitely a sensitive topic these days, because I think I have to answer it from both angles, right? Both the positive one and, in a sense, somewhat negative, because I think these days lots of universities and what they're teaching is somewhat little bit obsolete, right? Or basically being very dogmatic, basically showing just one perspective as that, hey, like this is our truth here, and they don't really facilitate that open discussion that I always imagine the university to be, right? Hey, we are trying to discover things, we discuss what could be, is it option A, option B, option D. But at least what I personally encountered was that lots of times universities kind of really push one specific side of the narrative, which is that part that I definitely did not enjoy. That being said, something as I experienced with architecture, what I think helped me a lot is that it's still a very broad field, right? Where I learned so many different aspects, ranging from, more if we take it to that extreme, some of the aesthetics, but also, mathematics, right? Engineering side, which kind of made me naturally curious. And also, it really, something like architecture is a very complex field, right? Where you just have to take it from many different angles. And I think I have somewhat same approach with investing, right? Where we have to, take it both from that qualitative side, but also the quantitatives, right? Understand both the product. Okay, is it something amazing like, Palantir, Tesla, where, we have to have lots of confidence in that engineering aspect, right? In that actual product, but then also see the financial aspects, right? So basically, all of those angles. So I think the university helped me with this curiosity and almost like a discovery process to really consider all of the alternatives, consider everything from so many different angles. So that's definitely what helped me with the investing.
Hmm.
Okay, yeah. So since people actually know that you're a guy who knows what he's talking about, you're an intelligent guy. uh could we touch upon how, for example, people entering the market right now with all the kind of forces acting upon them, both the macroeconomics, kind of the financial markets themselves,
Mm.
and the business cycle. How does one set up in the next year where we're gonna have the new president and things are potentially going to kind of change in maybe some drastic ways
Mm.
when it comes to imports and exports, or unemployment and all of those kind of
Mm.
indicators in economics.
Yeah, definitely. And it's almost, kind of like the wrong premise in a sense, right? Because I mean, of course, there is so much going on, as you just mentioned, right? There is a politics, there is the whole economy, right? There are interest rates. There are so many things to consider. And most of these, unfortunately, we can't really control, right? So it's also about, being, in a sense, smart enough to understand that there are certain forces that are going to influence us, our investments, and we cannot do anything about them. But we have to focus on what we can influence, right? Which is always, choice of individual companies, which also makes it a little bit easier, right? Because it's almost like easier to predict how one company will behave if they, let's say, continue growing their revenue, net income, instead of trying to figure out the whole world at once, right? That's why basically, anytime we are having some macroeconomy, predictions, it is just so rare for those to come out true. So what's even more important is to have almost like a plan prepared, right? Hey, let's say we go into 2022. What am I going to do if the market continues going up? What am I going to do if market maybe pulls back a little bit, right? Do I have some money on the sidelines that I can potentially invest? Do I want to maybe hedge my portfolio, through various means, either some money on the sidelines, maybe some put options, right? So it's not about trying to predict, but rather prepare.
Yeah. Oh, I love it.
Prepare, not predict. Yeah, that's definitely important, and I think that it's really up to date, especially what happened last week after the whole mess. After Jay Powell decided to lower interest rates with a hawkish kind of commentary. It was crazy, and as you said before, keeping some dry powder on the side is always going to be necessary, because companies are engaged in different dramas when it comes to their industry, but then the macro economy as a whole, hims, for example, hims and hers,
Mm.
you could see the irrational approach, especially with this company because of the drug epidemic. I mean, the fat loss drug epidemic, them getting really popular in the US, and all the problems regarding the regulation and how the government will approach
Mm.
health related issue with the new administration. But then at the other side of the kind of lens, when you zoom in, you realize that the whole problem is about a different type of compound than hims and hers offers. So like,
Mm.
it's something that you must kind of have a broader picture to understand why
Mm.
some things are happening or maybe potentially happening. But then you have to kind of have an edge over people to kind of understand whether
Mm.
it's irrational and the company is actually losing value, or whether it's a time to add. And potentially, I had many dilemmas, for example, whether I should increase my average price per share, because that's what
Mm.
happened with hims, for example. And I know that you've wanted to also build out a bigger position, but then it just went up really quickly. But then you have situations where you have pullbacks and you can add shares at a lower price than before, but then you're also increasing the average cost anyways. So you have to, in my opinion, be in a position where you're comfortable enough when buying more shares that
Mm.
you know that it's still a good deal. And that relates to what we said before about the threshold, where you think the company will be in the future.
Yeah, exactly. And to take it even step further, as you mentioned on some of those like a short term, there were some news about the compound, right? And it influenced him, even though it wasn't really related, because that's also the thing, right? That we all oftentimes like the wise thing to do is always like take a step back and actually realize, hey, of course these are all of the short term things, what's happening, now, this month, next month, but what's the trajectory of the company for the next 3 5 years, right? That's my question here, because is him something that maybe in 3 5 years can be somewhere in 10 $15 billion company at least, or maybe could it be even better, right? Can it reasonably scale into, let's say, 4 times the size, 5 times the size it is now? Because if we really like boil it down to the essentials, why do our shares become more valuable, right? Why it goes from, let's say, $7 per share to 30 to 50? Well, because that underlying company, it's a real company, it produces something, right? Provides some services. The company becomes better, serves more people, have more impact on the world, right? So what we essentially want is to buy a company that now is of a certain size, influence, impact, and we want to be competent enough to realize that this company can become this company in a sense.
Right. Yeah, definitely. And what you said before, just a second ago, when it comes to the kind of ticker symbols on your screen being, kind of fluctuating, it can really mess with your psychology, especially as, a young person. You treat it as, just a simple thing on the screen moving, and, depending
Mm.
on the numbers that kind of are released together or that are tied to this symbol, they influence the price. But at the end of the day, when even if you buy, I don't know, 10 shares for $10, you're giving a company $10 to, to play with it, and you're an owner essentially. And it's you probably have heard of many different comparisons where people will buy a new iPhone, but they won't buy the stock, and that's essentially the 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 thing that contradicts with each other.
Yeah, and I'm glad that you said it, because that's exactly what I was doing back in the days, right? So of course I have my iPhone here now, but it's, I think, number 13 or something. So what I was doing back in the days, and I still do this day, is that I might buy a new iPhone, let's say, every 4 years, right? And back then, back in 2017, 18, 19, well, I was buying lots of Apple shares, for example, right? So yes, I might have bought iPhone 1 year, but then I was putting more money into actual Apple stock, right, instead. And of course, now I might be buying more companies, but it's a, very simple principles also from that mindset, right? For people who might be very new to investing, to understand that, hey, we can maybe buy the thing, but we can also buy the share in that company that's making the thing, right? So, hey, maybe we want to buy new shoes, new Nikes. Okay, can I maybe buy some shares as well? If I'm maybe buying new shoes, I can buy shares as well, right? Or something like that. And that's, like a very simplified principle for even, like a very beginners to just get more comfortable with investing. And it also makes it, easy to understand that, like the shares that we are buying, they are real companies, they are connected to real products, they are connected to real people, right? When you're buying a share of a company, you're small owner of that company, right? And you're tying your future with that CEO and how he's managing the company, or even with each of the individual workers, right? So it's kind of really like connects us to the ecosystem, connects us to the whole world, connects us to the capitalism itself, right? And we all can benefit from our shared work.
Yeah.
Sure. And then, since we've touched upon actually, entering the basic investor kind of principles and the kind of ways to scale or get some shares instead of, buying other things, and actually kind of making your expenses uh work for you, I guess, or kind of noticing that
Mhm.
everything around you, the room that I am sitting in, the chair that I'm sitting on, I mean, this is probably a privately held company, but everything is about the flow of money, and you can actually kind of benefit from that by choosing the right kind of generators of the money. And so I would like to touch upon the basics for if someone wants to kind of get deeper into a company. What would you say are the basic metrics, as in the business and not the stock valuation itself, but to just be able to, judge a business itself at its core rather than the stock, because it's those are two different things. But
Hmm.
I think that, the most important thing, as we've said before, is knowing that you're buying a good business that will perform, because the stock price will always reflect the actual performance of the business and not the ticker symbol itself.
Yeah, exactly. And I would say it's almost like, you have basically like the qualitatives, right? The product, the company, the management, and then you have quantitatives, right? The financials, the metrics. And and if I had to choose between the two, I would say that always the qualitatives are a little more important. Or it's like that first step, right? That first we have to analyze the business, the management team, the product, and only if these things are basically get the green light from us and we are satisfied on that end, only then I would move into the financials and financial metrics and price to earnings and price to sales, maybe price to free cash flow, right? So at least for me, and I think some of the investing legends from the past, Peter Lynch would probably agree with me that it starts with the qualitatives and there is a little bit more weight on the qualitatives first before we even move into the quantitatives. I'm not sure if you have it the same.
Yeah, I also believe that the main thing is, getting the right business to actually hold, because, financials will always come as a result of the core product, not the other way around. And that's the kind of way to go about it, in my opinion, as well. Okay, so since we have covered the kind of basics of investing and acquiring shares, we could also talk about amassing the capital needed for buying those shares, because you actually need some money.
Mm.
Uh, could you kind of go back to your story and, for example, say how you split your expenses and the most basic things that kind of at the end of the day make your own income statement, cash flow statement, and your
Mhm.
balance sheet. Though, if you treat your kind of I don't know, economic kind of existence,
Mm.
it also comes down to managing the flow of
Mhm.
funds correctly.
Yeah, and I think that's great that you also wanted to touch upon this, because also, of course, before we even start to investing, we also want to make sure that our personal finances are in somewhat reasonable shape, right? And and once again, we are both from like the Central Europe, right? So it's not exactly the US. So there are like different levels in different parts of the world. But basically, what I would say, you know, anywhere in like the most of the countries, talking the US, Europe, and some of the more developed countries, basically anyone who should be able to get at least those 600 US dollars a month to invest. That's kind of like that solid amount that can put you on that nice trajectory. Of course, the more we can invest, the better, right? But it's almost like, if we have less than that, if maybe someone has just the first 100, 200, 300 to invest, it's great. Let's start. Let's get it rolling. Let's learn. But with that little disclaimer that at that stage, it probably makes more sense to spend the time with actually improving the income, right? Whether to get like a better job, maybe some kind of a side hustle project that can, bring us more money in the first place. So because it's simply better return on our time spent, right? Because if we can invest, just those, let's say 200, 300 a month, well, great. Even if we, let's say double it, well, it's something. But if we can rather actually find a way how we can consistently get some, maybe part-time job or something like that to get those extra, 600, maybe 1,000 a month, that can actually have a bigger impact, right? Same as, for example, when I was, back in the university, I was basically working in a restaurant, just washing the dishes in many various places, sushi place, then more like a upscale restaurant, so different places and so on. But since I was just living in my, small studio apartment, right, just by myself with basically minimal expenses, well, even back then, I was able to invest roughly $700 a month on a regular basis, regardless of what was happening. So even if I, let's say, in alternative universe, I would have just worked in a restaurant for the rest of my life, well, I would still be able to become a millionaire. It would just take me a little longer. We wouldn't be talking about, maybe 7 years. We might have been talking about, let's say 20 years, right? Or 15, 20 years. But that still means that, hey, even someone working almost, minimum wage type of job, they can still become millionaire within 20 years with the discipline, right? So frankly, for many people, it's also, of course, here we are talking about somewhat high level topic of investing, but it comes down to that one step before to even have like a good habit in terms of our personal finances, right? But it's almost a little bit out of scope of this discussion.
Yeah, of course. But I believe that, as you said before, getting your finances right is, I mean, it is the most basic step. Without it, you're not going to be able to enter the stock market and kind of progress. And was also important when it comes to actually getting the money is calculating. I mean, you don't have to do any complicated maths, but you're probably going to be better off keeping those $200 for yourself and being able to expand your skill set or whatever than putting it straight into the brokerage, because at the end of the day it's also the power of compounding. And the bigger the number you have in your portfolio over time, the more it's gonna kind of vary, or the bigger the deviation is going to be, both to the upside but also to the downside when it comes to the gains. You've actually had a six-figure day recently, right? I mean, in November, I think, or was it close to six figures?
Yeah, there was basically one day where my portfolio jumped over six figures because of, one day, of course, Palantir had some of the great day after just the elections in the US, right? So there was lots of volatility in the market. So also, and of course, once your portfolio is of a certain size, the daily fluctuations become bigger, right? So, where
Right.
back in the days, my portfolio might have jumped, few hundred up and down. Now it's tens of thousands, even, some of the days, right? But to also bring myself down to earth, I don't feel any different in the end, right? Whether we are managing 10,000 portfolio, 100,000, million, eventually maybe 10 million, the principles are roughly the same, to be honest, right? So if we can grow our portfolio from, let's say, 10,000 to 100,000, well, that's a 10x, right? And from 100,000 to million, well, that's just another 10x. And now from the million to 10 million, that's just another 10x, right? So it's just doing the same thing over and over, right? If we manage to do it once, well, then we might as well do it again and again. And then it's just about the consistency, having the discipline to keep doing what is working, right? So that's why investing is also something that I encourage people to make it a part of our life, right? And again, it doesn't need to be some crazy amount of time. Just make sure that, hey, we have those couple hours every week to check our portfolio, maybe review our companies when there is earnings season, right? And as long as we can find those couple of hours, we should do reasonably well. Because frankly, most of the people are not successful in the market because they simply don't spend the time, right? When you want to become doctor, you have to study for maybe 6-8 years, right? When you want to become electrician, you have to do apprenticeship for at least a year or two, right? And investing, people sometimes think that they can just, throw money there and it will all be, like this, fine. But no, it's also a thing that we have to learn, right? It's a skill. It takes some time, it takes some effort, but that's why people are successful in the end, right? That small amount of people who actually put the time and effort into it and learn and have those mentors, and it doesn't need to be someone one on one. It could also simply mean learning from some of the successful people, some of the smart guys who invested, some of the people that we might know, some of the people, whether it's on YouTube, whether it's in the books, whether it's anywhere, but as long as we search for it, we can make it happen.
Right, yeah, for sure. And I also think that the most important thing is not to look at the numbers kind of integer wise or strictly um size wise, but percentage wise,
Hmm.
because honestly I'm gonna have much more respect for someone who has a CAGR of 30% in a 10,000 portfolio than someone who has a $1 million portfolio with an average return of 10% per year.
Mm,
It just
yeah, I
it just
think.
means that you're a better investor, literally. And um,
Mhm.
looking at the percentages is actually what gives you a measure of how successful you are.
Mm, yeah, and I think that's a great point, right? Because sometimes people, let's say, might have grown their portfolio to multi six figures, seven figures, but simply because they were investing for a long time, right? If they were investing for, let's say, 20, 30 years and they go to seven figures, it's great. But if they maybe put have more time into it, they might have already been, much further ahead. And then I also know people who are still at the somewhat beginning of their journey, right? Even though they might have their first 20, 50,000, maybe first six figures, but they've managed to grow their portfolio quite fast, right? And even with a solid foundation, solid research. And that also means that probably that person who managed to grow their portfolio relatively fast, let's say the first six figures, if they stay on top of their game, they can also scale it further, right, to those seven figures, and it won't take them those 20 years as that other person, right? It will just take them maybe 10 years.
Yeah. Yeah, and that's also what you can see in the group. Actually, there are people who
Mm.
have portfolios of literally in millions, but some have a smaller return. But you also have to consider whether those people have families or whether
Mhm.
they're single, because that also kind of influences the risk you'd want to take and all of that. But there are also people who are just starting off, and I don't consider myself an expert by any means, but i I just want to gain as much experience as possible.
Mhm.
Right now I'm in the DP program in high school, and it's really challenging. Sometimes you don't have any breaks. My
Mhm.
lessons are really long, and it's just whether you actually want to do it. And at the end of the day, everyone has different goals. Some people want to invest to safely retire, but some, I believe that my goal, for example, is to be able to live partially off of my investments, and then be able to create a, I don't know, a business that I would also enjoy. But for me, for example, personally, I actually enjoy investing. I find it actually interesting. And if I were to go to uni, I'd choose finance for sure.
Yeah, yeah, exactly right. So as long as we put time and effort into it, we will be successful. And the school can definitely teach us plenty of things. We just have to take the useful things, right? Because there are also plenty of things that might not be that useful, or we don't know yet, right? It's also a little bit tricky thing.
Yeah, yeah, the things are changing so quickly that it's getting crazy. But either way, I think we're gonna be approaching the kind of reflections. Could you could you kind of say what went right and what went wrong? Because maybe you had some kind of whereas days or stocks that made you lose more significant amounts? And what would you change if you were to change something?
Yeah, and that's always tricky thing. It's always, yeah, if we knew back then, yeah, we would already be not just seven figures, we would have eight, nine figures, right? If we were prescient and could predict the market. But the point being is that we always have to do the best we can with that somewhat limited amount of information. Make sure that we make better and better decisions over time, because yeah, of course, yeah, if I knew where the top was, I would have sold at the top and I would have bought at the bottom. But that's not how life works, right? We always can live it only the way forward. So it's almost like, hey, well, what we can learn from what we've experienced, right? Because I mean, the only thing that maybe comes to my mind is that almost I was a little too timid when I was starting to invest, just with the index fund and slowly moving into individual companies. I actually think that what you did with just going straight into individual companies, as long as we are serious about it, it's almost like the better way. But yeah, back then I didn't know anything, so I just have to start little ease into it.
Hmm. Yeah. Okay. Well, I think we're going to be approaching the end then, but that was, I hope you've enjoyed it, but I definitely did. Thank you so much for sparing your time for me. It was a
Yeah.
pleasure for me, and I've actually managed to gain some wisdom and get to know your viewpoints better. So that's also a great plus. Well, so I'm gonna finish recording, and we're just gonna be say our goodbyes off the camera, and um yeah. Thank you guys so much for watching, and we're gonna be ending the recording.